Hello and welcome back to my class once again. This is Sam welcoming you all. So today the class is going to be on MACD. MACD stands for Moving Average Convergence Divergence. So with the name you can understand that it's related to moving average and convergence divergence as well. So let's not waste the time. Let's start the class and we will understand in this class how to set it up and how to catch the trends, how to understand which trend is there, how to take trades on this MACD and different tips and tricks and everything. Let's not waste the time. Let's begin the class. First thing first, we have to go to the indicators and we have to type in MACD. So you can see it's already there because because you're not going to use all the indicators because there must be like thousands or more than that the indicators are there. So some of the selective indicators you have to combine it along depending upon which ticker you're using, depending upon which market is it. So you have to combine everything together. It's like an arsenal. You're going for a fight and you just have one of the arsenal, like one of this thing to fight. So you're not going to fight along with that. It's like a combination of everything. It's like a combo. Either you use MACD, Bollinger Band, RSI, Fibonacci. Fibonacci is always there because that's the numbers based. So you have to take the confluence, you have to take the alignments and the harmonical numbers and all. So once you get the hang of it, in the beginning you might feel that this is too much, but once you start doing it, you will get used to it, you get pro to it, and you know how to check different places, like exactly which trade you are supposed to take. So this is MACD, Moving Average Convergence Divergence. To open this, the settings, you can either double click on this, it's simple, or either you can go to MACD and click on this settings. Once you open the settings, this is fast line, this is slow line. So this is the moving average number, 12 moving average and the 26 moving average. So this is the source is closed. So when the candle is closed, they calculate after the candle is closed. Signal smoothing is 9 and it's a EMA, not the SMA. You can select the SMA, but let's keep it simple, keep it EMA. And style, it's all right. This is histogram, this is MACD, signal, zero line. If you want, you can change the colors depending upon your preferences. That's all. That's easy go. So this blue line, let me show it to you. This is input, the fast line, and 26. This blue line is MACD. So this one is calculated. This is the difference of 26 and 12 exponential moving average. The difference of it is the blue line. This one you can see like this as well over here, the style as well. See, the MACD is blue, the signal is orange. So this one is 9 moving average and this is the zero line in between. This is the histogram, the green or the red. So it's quite obvious that the green is when the market is going up, the orange is when the market is going down. I'll show you why exactly that's the green is darker green and the red is darker and the light. So let's finish with the settings and now let's check what exactly the histogram is. Okay, so once we open it, we can see this is the blue line and the orange line. So this is the MACD and we are going to check everything along with this. When the orange is below and the blue is above, so in that way we are going up, we are going bullish. That's the market is showing bullish sign. When the orange goes up, you can see over here, when the orange goes up and the blue is down on the top or below, it's the same thing. When the orange is up, blue is down, the market is going down. When the orange is down and the blue is up, the market is going up. That's simple. So you can see over here as well, practically you can see this. Orange goes down, blue is up, market is going up. When the orange is up and the blue is down, you can see this, blue is down, it went down. You see this? And this one is histogram, this one is the bars. These bars are showing if the market is bullish or bearish. This is the zero line. The zero line is basically, you can see the number over here, 0. That's the zero line. That's the mid of the line, mid of the histogram. So what happens over here, when the market is going up, it shows the strength in the market. So the strength over here is very strong because this is darker green and the strength is bullish, and the more further it goes, the more higher it goes, the more strength is shown. When the strength is this one, this you can see the light color, light greens. So this shows the strength is less and the market is moving down. That's the reason you can see over here the market is moving down. See this? The bullish strength is losing, and over here as well you see this, the market was moving down and then it lost the control. So the more space there is in between these, the bigger the bars become. You get the point? The more space you have in between the lines, the bigger the bar becomes. Now let me show you in the chart how these trends are being observed. Like we can see over here, you see this. Okay, let me show you from the beginning. Okay, let's mark it over here. When the market was going down, you see this, the market was going down, though it gives a late signals because it's a lagging indicator. The moving average or any other, they're lagging indicators. They respond late, and yeah, that's the reason we won't find top most of the time. We won't find the top. We'll get somewhere around over here. So you can see this overlapping happening over here. So this overlap happens and the market goes down, and then again the market overlaps over here. So from here, from this candle to this candle, we miss this part. This whole part is missed. How to grab that, we'll tell you later, but for now you need to understand that yes, even if you would have took this trade is still good. This trade you could have took from here till here, that's still not bad. It's a good trade as well. But when to trade and when not to trade, you have to be cautious for that. Let me give you some more examples. The more examples you get, the better you understand, because with examples it clears your doubts. And no matter how much talk I give, if you don't understand and if you don't see the practical examples, then it's just a waste of time. So yeah, let me give you some examples. So you will see quite a lot of repeated same thing happens. The market is just a repetition of history. So you saw this one. Let me show you some more, like 4 or 5 of them. So you see this is overlapping over here. Let me mark it over here. Let's give it this one, right? This is quite obvious and evident that yes, the overlapping had happened. The orange is on the top and the market is going to go down. And when the market overlaps again, which was this one, you can see this, you get from here till here, right? This candle, right? So let's talk about like this candle over here. The close was here. It's still like good 15%, right? Really hard to get a bad trade in MACD, even if you just trade with this. But there are few rules you have to follow it. If you follow the rules properly, then it's very rare that you find a bad trade. And if you combine the other indicators as well, and this is like a charm, trust me, this is like a charm. MACD goes with everything. MACD goes with Bollinger Band, RSI, like so many different. You can combine it. Let me show you a few more examples over here. You see this from here till this one, right? There you go. It's still like from here to here. This candle to this candle, like 10%. So there are so many trades. But yeah, you have to make sure that you are not buying. I'll tell you a few more examples and I'll tell you what not to do in this. Like what to do you will know, but what not to do is much important, because you're going to lose money if you don't know like what exactly you're not supposed to do it. And that's where we make the mistake, because the gurus in trading, they'll tell you what exactly to do, but they will never tell you what not to do. And they will, I don't know, maybe like they even doesn't know as well, or maybe they are learning and they're experiencing as well. So I'm not blaming them, but it's okay. They have the schools open, but still they don't know how to set the examples and the rules of not to do, do's and don'ts. So everybody tells you what to do, but where there are very few who tells you what not to do, which is important. Let me show you some examples here. You shouldn't take the trade when the lines are above the bullish scenarios. See about the lines are here. Let me show it to you. The lines are here, and two scenarios in this, two mistakes. One, that the market is going down over here. You see this, the market is going down, which is normal. You might think that okay, this is the overlap. We can take the trade, the market is going down. And now look at it. This overlaps over here, then again it goes down. I'll give it a chance again. So this goes down. You're going to exit over here, right? Because it's overlapping again. So you might take the exit over here, but I'll give you one more chance that okay, you might continued and you took your exit over here. Still, you can see the difference. The difference is not much because this is the candle, right? This candle, this one. So imagine if you took the trade over here and you exited over here, you didn't made anything. So what mistake was there? Number one. Number two, when it is on the top and you see overlapping over here, you see overlapping that the orange is going down and the blue is on the top. So you're going to take the trade, which is the bullish trade, which is you're going to long. But that doesn't happen because it's already on the bullish side. It's already on the greener side. So when it's on the top, both the lines on the top, and you're going to take the long again. So when it is over here, so what do you think? This is going to break? You think like this is going to go like this? No, it's not happening. You only take the trade when it's overlapping below. You only take the bullish trades when overlap happens below. You take the bearish trade when overlap happens on the top. This was one. Second, what mistake it happened that you only got from here to here? I'll show you something. In simple, stupid simple, right? You see this? This was the bottom, right? And if you take it from here to here, what do you see? You see a bullish scenario. This is the trend. When you mark the trend line, you get to see the trend. The trend is going up. So trend is going up, but still you want to take the trade down. You have to see all the scenarios. Why you're taking the trade? Just because of the MACD? No, you're not going to do like that. Even if you're going to take from the MACD, still you have to check the trend, because trend is absolutely your friend. So you have to consider the trend, what exactly the trend is. Then you know which side is your bias, where is your most profit is there, because the majority of the people, you're not going to swim against the river tides. The current of the river is flowing like this and you're going to swim like this. Imagine how much pressure you're going to take. So the same way, it's flowing to the top side, just flow with the wind, the trend. So trend is your friend. That's the reason. Just because this was bullish, and when you try to take the trade from here, it just tested over here, just tested the trend line and it bounced back. You see this? The trend line, just draw the simple trend line. You took the trade here, it bounced on the trend line and it just bounced up, and you can see where it went. So this is how it happens. You go along with the trend. And let me give you some more example. This was one mistake, the trend. You always check the trend. Second, you don't take the trade when it's already on the top. You take the trade like for the bullish, when the overlapping happens on the below side, then you take the bullish long. When overlap happens on the top side, you short, you go down like the bearish. Let me show you the divergence. Some examples you'll see. This is Ethereum daily chart, and you see this one, this red bars, and you see the strength going down. The strength has gone down. Okay, the strength has gone down. What does it mean? The bearish strength has gone down. So the bears are losing the control and the bulls are taking over. You'll see more things. You see, just try to observe things. Over here, the market stays just the way it is. There's no changes over here. See this? The market stays like this, but this one is moving down. The strength is going down, but this is still on the side waves. It's like an accumulation zone. And now see over here, you get the green candles, the big harsh green candles. The market spiked a little bit, but then again, controlled way. They got it back again. Because why? Because the smart money, they try to accumulate, because they are the one who is going to create things, and without people knowing. But yeah, they follow the charts completely. Most of the times the manipulations are there. Of course it will be there, but they manipulate according with the charts. That's why you get to hear the news as well. And yes, there are majority of the people who hear the news and they just jump in without knowing the circumstances, without understanding the smart money is going to bang them right hard. Okay, so this one, I'll show you one more thing. This you can see the accumulation happened, the strength of the bears are losing up, and over here also the bulls have taken over. But the thing to notice is this one. You see this? This is such a huge candles, the bearish candles. But where are the bears over here? You don't see that. So that means the smart money, they have put all the orders over there. Whoever is selling, and they're just accumulating, they're buying it. They're not letting the market go down from a certain threshold, certain bars they have set it, and they just don't want it. And one more thing I'll show you over here. It just came into my notice. You see this? What do you understand with this? I'm sure like if you guys have watched my video of supply and demand, or support and resistance, you'll understand this is what? Yes, this is your support. This used to be the resistance. Once it's broken, it became the support. So, and once you there is few more. So once you go left, you will see there was a resistance over here. There was a resistance. It was a support before. So yeah, you keep going left, you keep on seeing the numbers are actually not just random numbers. And if you don't still go and get it, you see over here, the same support is being used. This is like liquidity zone, whatever you call it. That's like big names have been given by some traders. I don't know who, but they try to confuse you. Don't get confused. Just get everything combined together and make it simple as it could be. So put it like simple, that this is the place they are buying and this is the place that is going to sell. This was the place where it was the support. This was the place is going to be resistance as well. So once it was a resistance, once it's broke, it became the support. You see this? The same thing. Call it liquidity zone. You don't have to understand all the terminologies and all. Just make it simple. Just try to get the layman language. I know know it's there to confuse you, and every industry has the terminology thing, and this is like a show-off kind of thing. I don't know why they make it up, but if you keep it simple, it's much easier. All right, so this was, you understood how to combine things, you understood the divergence, you can see the divergence, accumulation, how accumulations happens, and how to identify the accumulation. When you see the big bars, the bars are bigger than this is very strong. This was even lighter, but then lighter than this. There was a strong bars over here, bearish bars, but you don't see much happening over here. So that gives you an idea that there is an accumulation going on. And what's the price over here? It's 2200 approximate, right? And once we see above, it made an all-time high, the all-time high which we haven't broke until now. So this is how the big players, the smart money, or the whales, you call it anything, they play with us. All right, so guys, this was it for today. This was the class, and this was the MACD class. Short and sweet. It's not complicated, it's really simple. Though people try to make it like a big thing, it's not a big thing. All you need to do is practice whatever you have learned. Open your chart, whatever the platform you use, TradingView or anything. I use TradingView. Open the chart and just play with it. You don't have to trade now. Play with it. Play it like a game. You don't have to be answerable to anyone, so you're not putting your money. Play, understand, just look. Even if you do it for half an hour every day, it's like a compounding. You will be getting fruits later on, because whatever seed you put now, you're going to pluck the fruits later. Don't waste your time, and I would say this is very easy. So learn this, understand this. This was it for today's class, and we'll see you on the next class. See you, and bye-bye.